Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Wednesday. It's June 21st. I'm waiting for the summer to start, and I'm realizing that if I don't get it together, it's going to be over by the time I snooze and lose. It's about 7:59 in the morning. The market's going to gear up to open up in about an hour and 31 minutes, to be specific with you. Before we get into all of the juicy details, if you are on the Wealth Press YouTube channel, that's where you could find this video immediately, or my Telegram channel. Go to YouTube, go to Wealth Press, and you'll see the video there. I usually post it about an hour before the market opens. And subscribe to our Telegram channel. That's rogerscott.com/Telegram, and you'll be signed up to be the first to get these videos, pictures of my cats, my market analysis, my dirty jokes, all that other fun stuff. Now let's get into it right now. So the Nasdaq is down about 22 points. The Dow futures barely down at 16. There's definitely more. Now, this is pretty random. This isn't a major sell-off or anything like that. But you could tell just by looking at this data that there's more selling pressure on the Nasdaq than there is on the Dow, because the Dow's at 34,000 and it's only down 16 points, whereas this is down 24 points, but the value's 15,000. Again, though, this is very, very random trading action. Remember, this is a fragmented week. That means that markets are going to be slow to get moving. But today, look at this. Jerome Powell speaks. How do you know if Jerome Powell is lying? Are his lips moving? Don't get me started with this guy. He's something. We've got a lot of Fed officials speaking today. The one you really want to watch out for is Goolsbee. He was there during several other market meltdowns, and he tends to be a little more bearish and a little more cautious than the rest. I'm very curious to hear what he's going to say, but I think the market's going to be very volatile depending on what the tone, the different speaker. It's like a buffet menu. Depending on which speaker speaks, you're going to see volatility. Keep your eye on the bond market, the long bond. Now, this is the TLT. This is the ETF that represents the long bond, because most people don't want to look at the futures contract. But anything with a 10-year, 20-year, 30-year, which are very, very correlated, you could see that right now this asset is in a channel and it's an ascending triangle. And typically ascending triangles break out to the upside. I'm looking for more upside, maybe for this sucker to go up to about the 108, maybe the 110 area, where I would love to sell it. But it is overbought right now, temporarily on a little bit of a sense. So it may gyrate throughout this channel a little bit over the next few days before it breaks out. But so far, the trend looks bullish, and I love my flat top triangles. They consolidate, and then they tend to break out. So let's keep an eye on that. Another asset, which I mentioned yesterday, that appears to be worth taking a look at is volatility. I know it's heading lower, but I'm telling you right now, based on what I'm seeing, this is one of the cheapest assets you could find. If market starts cooling off, and I'll show you some evidence that it may start doing it sooner than later, there's a good chance we may rally. We may spike up to the $20 level, which wouldn't be all that much, because we went up to about 20, almost 21 last time, and 21.47 the time before. So it wouldn't be unforeseeable for us to do that, and it looks like we've been consolidating around this area for quite some time. So don't throw that out just yet. Now let's talk a little bit about global economy, what to expect, and then I'll get into the charts. So market participants weighted China's outlook. China is huge right now. It's a big, big, big wet blanket for the global economy. And it's one of the reasons why U.S. is having an issue getting out of this recessionary or depressionary pressure that we've been seeing for quite some time. Although you wouldn't know it by looking at this at the tech stocks, right? Don't, folks. It's not going to last. This tech rally will subside. Bracing for the Federal Reserve, Jerome Powell's congressional testimony, which starts today. I hope he doesn't spin it and say we're done raising rates. We're not even close. Energy stocks were a big, big drag on the market. I told you a few weeks ago that energy does not look really great. And energy looks like it's got more downside to go because it wasn't responding really well to fundamental data, which is very, very huge. And remember, energy used to respond really well. But there was an OPEC cut and nothing. And that was a big red flag. Also, the momentum levels are not matching other stocks in other sectors that are rallying right now. So crude oil dropped, and a number of U.S. listed Chinese consumer stocks also lost ground. Keep your eye on Nike. It fell over 3%. Morgan Stanley downgraded the stock slightly. Not a good sign. They have a lot of market cap in China also. Now, economic data on Tuesday, that's yesterday, showed that U.S. housing starts unexpectedly rose to a 13-month high, which is why home builders are making all-time highs right now. Stronger than expectation of 1.4 million, while U.S. May building permits rose to a 7-month high. That's really good news. Stronger than the expected of 1.4 million, further contributing to concerns surrounding monetary tightening. Absolutely true. We now have almost an 80% chance that the Fed is going to raise rates a quarter of a basis points. It doesn't seem to be knocking the long bond out of its trajectory on the ascending triangle that I just showed you a few minutes ago. So we'll stay with that probability. I think the numbers are not going to be moving back and forth unless the Fed speakers really give us something unforeseeable. But I would be surprised if this number went below 50% between now and 5.5 weeks from now. Today, we're looking for Federal Reserve Mr. Squirrely, a.k.a. Powell, semi-annual monetary policy testimony before the White House, the U.S. House Financial Service Committee for fresh clues on their next move. And don't hold your breath for them to start lowering rates. We're also going to hear from Goolsbee, which tends to be a little more bearish. He survived a couple of nasty market turns, so I want to hear what he has to say. And Mester for further clues. Now, everybody's been fairly straightforward except for Powell. I'll be honest with you. They haven't been nearly as squirrely as him, so I'm really curious to see what they will say. In Europe, data from Office of National Statistics showed on Wednesday that British consumer inflation remained elevated in May, with investors ramping up their bets of a 50 basis point rate hike by Bank of England on Thursday, compared to previous anticipated 25 basis point hike. So it'll be very interesting because remember, folks, the world is connected. China's Shanghai closed lower as investors remained disappointed regarding Beijing's lack of new and specific economic measures, while geopolitical tension continued to hurt sentiment. The People's Bank of China implemented a 10 basis point reduction in both the 1-year and the 5-year loan prime rates, disappointing some investors who were anticipating a more substantial cut in the 5-year rate. China's just disappointing their investors. They were expecting really great things after the COVID, and it's just slow. It's natural. I mean, you can't just spring at a 3-year of a virus and just pretend nothing happened. It just doesn't work that way. It's like getting up after a 100-mile-per-hour car accident. It's going to take you a little time to feel better, if you ever recover, and they will. Japan, fueled by expectation of a Bank of Japan maintaining their accommodative policy, which means Warren Buffett may be buying more stocks. He's aggressively getting into Japan before they start raising their rates because he's obviously using margin and he wants to get in before rates go up. The minutes from the Bank of Japan's April meeting showed that the majority of the board members, 9 out of 10, expressed no plans to make an immediate adjustment to the ultra-loose monetary policy. But they have a new head. They have a new prime minister who's a U.S. Harvard-trained economist, and he doesn't believe the same way that they've been running their country for the last 30 years. He's going to make changes. Keep your eye on transport stocks today, especially FedEx. It was down 3%. The earnings were not great. And today, keep your eye on KB Homes. The stocks, all home builders are just, not all, but most, Pulte, KB Homes, Kaufman and Brott, they're all doing really well. They're trending very strongly. I may actually recommend one of them in a few minutes when I talk about my one long, one short actionable trade ideas for Wednesday, which is what the topic today is. But KB Homes is reporting today. I'm expecting good stuff from them. I don't think that they're going to be going down anytime soon. Now, looking at technicals, now, I mentioned that I believe volatility is going to come back up. Let me show you why. This is the XLK technology sector. I know. I've been really bearish on it, and it's been just going against us. But look where it is right now. This is a weekly chart. And look at momentum levels. There's absolutely zero catalyst to cause technology to go higher right now. Zero. Semiconductors. Look at semiconductors right now. This is a 5-year chart. Look at momentum levels. This is weekly data. Is there a catalyst right now to cause prices to go higher? Absolutely not whatsoever. And look at small caps. Small caps are still in the crapper. And large caps typically do not revert higher. Small caps do. Now look at consumer discretionary. It's been on a tear too, but look how far away it is from all-time highs. And consumer discretionary, Amazon, Apple, is it consumer discretionary or is it technology? It's both. China in the crapper, interest rates not, inflation being sticky. For this to rally like this and break out would not be common. So communication is also at a multi-year high. Look at this. This is going back to 22, not a multi-year, 1 year high. And consumer discretionary is also at a 1 year high. Meanwhile, technology is almost at an all-time high. And you could see here, this is 5 years. It couldn't get above this level before COVID. Do you think there's a reason right now? Do you think AI is so strong right now that it's going to do that? I don't think so. So consumer discretionary, communication services, and technology are making major resistance levels. Now, industrial stocks, look at momentum. This is the 20-day moving average. Look at industrial stocks. And if you think it's just a 20-day, look at industrial stocks on a 50-day. Look at that. So the Dow, this is a 10-year chart. 1 time, 2 times, 3, 4, 5, 6 times we've been at these levels. 6 times in the last 10 years. In the last 20 years, this only goes back to about 2015. So in the last 9 years or so, we go up here once a year. The Dow's overbought. You could tell that by looking at it right here. Industrial stocks are overbought. Here. You could see that by looking at this thing. That we're now back in our base. Let me just change this. We're back now in our base. Industrial stocks are also doing exactly the same thing. Look, they're coming back down to their base. I think the Dow's going to come down, and I think all of these resistance levels are going to cool off as well. Now, today's Wednesday, and on Wednesday, I give you my long stock and my short stock. And for my long stock, by the way, look at First Solar. I told you here it's going to fill this gap, and it did. So out of my long stocks, the stock that I like right now, believe it or not, is Pulte Homes and Royal Caribbean. I like Royal Caribbean, and I think this flat top breakout is going to move higher. My wife's good friend, one of our kids, really good friends, and my wife is friends with her mom, is a travel agent, and she's telling us cruises are so overbooked right now, it's crazy, like crazy. And my parents, I'm sending them on a cruise to Cancun. I don't like going there, but they do. And they're booked up. So it's very hard to get on a cruise ship right now with COVID behind us, revenge travel, all of this. So Royal Caribbean's looks really good right now. I like it's the first time in 3 years I'm recommending these stocks. Royal Caribbean, GE, and Pulte Homes. You cannot go wrong with any of these. And GE looks like it's pulling back right now. I think the quantum indicator gave us a buy signal on it right now. So be really interesting to see where it goes. Keep your eye on that. And I also like Lamb Weston right now. Those are the stocks. But honestly, Royal Caribbean, GE, and Pulte Homes on the long side, and on the short side, oh boy, there's just too much. There's too much to the short side. Advanced Auto Parts, I think, are going to go down to about the 64 level, 62 level. And that's another one is Boston Properties. I think this one's going to go down to 48. And Zion Bank, I think it's going to go down to about the 23. So you've got Advanced Auto Parts. You've got VFC. This is a great short. You've got Boston Properties. And you've got Zion Bank. More than you can bargain for. Now, before I let you go, folks, I love a good bargain. I mean, who doesn't, right? And little do people know, great bargains actually do exist in the stock market, but only if you know where to look. I've been trading for almost 30 years. January, first week of January is going to be 30 years. And now I've discovered a pricing mismatch in the options market where the biggest opportunities exist. And that mismatch can turn a 1, 2, 3% move in a stock into a 20, 25, 30, 35% in an option in just a few days. If you're up for a good bargain hunt, who's not up for a good bargain hunt? Everybody's up for a good bargain hunt, especially now when techs are making all-time highs. It's crazy. Click on the link below, and I'll tell you exactly how to find these pricing mismatches. Now, if you're watching on the YouTube Wealth Press channel, like, subscribe, and post comments. I respond under the video. You guys have a great Wednesday. Remember, it's a fragmented week. We're going to start out a little slower than usual, And watch out for Fed speakers, not tech speakers, Fed speakers, especially Austin Goolsbee and obviously Mr. AKA Squirrely. Talk to you later. Like this video, subscribe to this channel, and I'll see you guys later. Any questions, send me an email, support@marketgeeks.com. Bye.